Welcome. Thanks for joining us. I'm Nate Durako with Advanced Trading, joined with Michael Reginelli and Brian Basting as we rehash the October WASDE here. Kind of a sleeper, I'd say, generally. Somewhat within the expectations for corn and bean yields. More focus right now on the harvest pace, I think, that is going along very quickly. Corn down 416 on the D's, down a couple. Beans down about 10 at 10:05. Wheat down 4 in the SRW, spring wheat and hard winter down about 6. So jumping into it, Michael.
Yeah.
USDA bumped corn yield a little bit,
Mm-hmm.
Slightly above the average trade guess, but again, not a real market mover, I think, kind of within the expectations.
Yeah. Saw
a couple adjustments to the balance sheet. They adopted their SEP1 stocks number, so our ending stocks for last year at 1760, what will carry into this year. What changes did we see in the 24-25 balance sheet?
I think really, I mean, this was a objectively boring report from almost everybody's perspective here. Not a lot of changes to speak of. I mean, with the 23-24, I guess start there. Like, we had the stocks report on September 30th. We recapped that. We had those numbers. We knew feed and residual was going to be a little bit higher coming into this. We knew SEP1 stocks, while still much higher than they were last year, were tighter than the average trade guess, right? So
some excitement in the board after that.
Yeah, sure. Yep. Popped it, on SEP 30 and then kind of an early OC, and we've slowly been resetting the deck a little bit, but we kind of expected that carry in to tighten up a little bit, right? So USDA acknowledged it, baked it into, the WASDE here on the monthly numbers. So that was kind of expected. In general, I think the yield was maybe, less expected for it to go up. If you look historically, though, when the USDA bumps corn yields in September, it's pretty rare for them to take them down in October. It's the old, big crop gets bigger that people have used for decades. Well, in this case, they're sticking with the trend. I think if we're going to see a crop revision or a yield revision on corn, my guess would be it's probably going to be January in the final, or maybe they'll start stair-stepping it, just before that. But given the pace of corn harvest up to this point, the fact that the country has been so focused on getting beans out, I think they almost want more anecdotal data probably before they address the corn yield, if they ever do. Yeah. So that was the big thing. So 24-25 production up a little bit, carry in a little bit tighter. They did take exports up 25 million, which gets that carry out down to 1.999. Yeah. So we broke below 2 billion. Internally, we've been in the mid 1.8s for quite a while now, so it's trending the direction that we've kind of expected. There's obviously a chance at this point there could be further increases to the export side of the balance sheet as time moves on here. Had another pretty healthy flash this morning. Big flash. So 20 some odd million bushels again this morning on a flash. So, but that's really kind of the main takeaways on corn as far as domestic balance sheets today.
Right. Comfortable crop, kind of feel like we could repeat the last couple report outlooks that we've done on these videos. Yeah. It seems to be a stable crop. USDA is still implying a pretty big testoid in their yield calculation. So, as we ramp up and probably move through corn harvest here very quickly, we'll continue to hear yield data come across the table and see if there's potentially any maybe drag down on the last part of the crop with some dry weather. But today it feels like it's within the range of where we're at. It doesn't feel like that's going to be the big mover going forward.
They didn't touch acres today too, is another thing I guess I'd mention.
Unchanged corn and beans.
Unchanged corn and beans planted and harvested. So that was one thing the market was looking for. There was a general thought that maybe we could see maybe a slight reduction in harvested acres on corn, left that steady. So really focus folded into yield for the most part.
Great. Brian, kind of Michael hit the export number, and I think that's been a lot of the chatter over the last couple of weeks internally. We're still using slightly higher than the USDA at a 2.4 number. What do we see in the world balance sheet that maybe continues to support this optimism of our corn export program over the upcoming marketing year?
Yeah, you summarized that well, Nate. Optimism, because USDA really addressed both South America and the Black Sea today. Starting with South America, they reduced Argentina's projected exports for the current crop year, the crop that Argentina is wrapping up harvest, just wrapped up recently by 3 million tons.
Mm-hmm.
That's 120 million bushel. And they reduced Brazil's exports, Nate, by 2 million tons. So combined South American exports were reduced 5 million tons, or roughly 200 million bushel from what they were in September. And we can add on top of that, Nate, that in Black Sea, USDA reduced Ukraine by 1 million tons and reduced Russia by 500,000 tons, another 60 million bushel. So when you add all that together, both South America and the Black Sea, 6.5 million tons or 260 million bushel.
Pretty big change.
Pretty big change.
Yeah.
And as Michael did a great job summarizing a moment ago, we are seeing some exporters step in here and buy U.S. corn.
Yeah.
And right now, U.S. corn is in well position to surpass that 2.325 estimate from USDA. I think down the road, the wild card would be, is China going to come back in here at some point? I don't want to jump ahead because USDA did reduce China's imports today by 2 million tons.
Right.
But that would really change. For the moment, let's leave China aside and say that just by the fact that the smaller South American and Black Sea crops really sets up the U.S. for a strong export program, relatively speaking, to the last few years for this SON quarter and probably stretching into early 25.
The China reduction is noteworthy too, because it helps offset some of those drops, right? So there's still gaps out there to fill, but that's certainly gonna.
And without China, we're still at the high. I mean, our unshipped book is what, the highest since 2018.
Yeah,
something like that.
Yeah.
So it's it's setting up. There's reason to have some optimism, like we've said on the corn export picture. They did reduce Ukraine, like you noted, Brian, but I'd say some of the trade is still using a smaller production number, right? They came down slightly on the production, dropped exports 1 million, and they didn't do anything to the EU production, right? So the market's still kind of watching that too. The flash today, potentially some EU business.
Potentially,
So, a lot of moving pieces. I think that's continues to be a positive part of our balance sheet. If the crop's there and we got a big crop, low prices cure low prices. Hopefully we're finding some world demand. We're very competitive in the world market right now, pretty well on the forward curve until you start to focus maybe a little bit more on the new crop South American production. And weather permitting, that crop looks like the bean crop's going to get in at a little bit more of a normal pace if they catch some of these rains. So we're losing a little bit of the steam in the wind in that sail for the bullish market.
Well, I think you said it. I mean, prices are cheaper than we've seen, in a number of years, and
plus years.
Right. And you got noted issues in the Black Sea, you got shortfalls in the EU, you got potential issues in Argentina. It's way too early to know what Brazil's crop's going to look like, because when they matter is going to be late summer of next year. So if you got low prices out of the U.S. and we're rolling off a big corn crop, record yields here, then we're well positioned to pick up that business.
And I'd add to that, guys, that when you look at the pace of exports from Brazil, it's been very slow relative to historical levels, and importantly, it's very slow relative to the forecast the USDA came out with today. So one could make an argument that 2 million ton reduction that the USDA made today in Brazilian exports, that could come down even further in future reports. Right? So again, you don't want to get the cart too far in front of the horse here, but I think it's important to note that with these changes, U.S. is back to being, for the moment anyway, in a good position to be an exporter. Now, as Michael hit the nail on the head, we just harvested the biggest crop we've ever harvested too. So you don't want to paint the picture, well, this is going to be an export program that's going to rescue the corn market. Right. Maybe some stability at some lower level.
Great point. Yep. And something to remember for producers, right? This isn't
it's
not a 2 billion bushel going to a 1.5.
No, not at the moment.
Potentially not a fundamental shift in kind of our comfort level of our carryout, but puts a little more emphasis on the upcoming growing season for South America, definitely. Yeah. And along the lines of the Brazil, right, the export pace suggesting maybe some further downsides. We're also, a lot of conversations around their domestic demand, their increased ethanol crush. And we noted that I think USDA upped their domestic use 1 million metric tons. So the basis levels and comments that we're hearing down there from domestic buyers trying to make sure they've secured a good portion of this crop that was harvested up until that safrinha summer corn or late season corn crop comes, definitely adds to that storyline, right? We're seeing prices, we're competitive in the world, and we're picking up the export pace out of the U.S. So continue to focus on that positive as producers are out there potentially harvesting a record crop here. Michael, on the bean side of it, maybe even a little quieter than corn. I feel like there was
Yeah.
at least some excitement in the export picture on the corn balance sheet.
I know.
What do we see on the bean side from any domestic changes or yield changes?
I mean, they took 1/10 of a bushel off the yield. I think that was pretty much in line with, what we were expecting internally and what the market as a whole was expecting based on conditions. Sliding a little bit, it's probably easy to justify, a slight reduction. We also have more bean harvest completed up to this point. I mean, relatively than corn. So like boots on the ground, just based on kind of what you've heard out in the country, especially towards that last, I don't know, half to third of bean harvest, it feels like at least in a number of areas, yields maybe
Tailed
slid
off a little
bit. Yeah. So very
dry finish.
Dry finish. I mean, a lot of 10, 9, sub 9% beans getting
8,
harvested.
7, 6.
Yeah. So I mean,
some low moisture. Out there.
some low moisture, low test weight. So there's quality obviously that goes along with that, but I guess it's not a shock. It's still a very minute change. Very, very little. I think the only other thing that they did was they took residual down too, and I mean we're basically pushing a rope. Carryout stayed the same at 550. I would argue it's easier to take that higher than lower as we work our path forward from a carryout standpoint. That's bias, obviously, but it just seems like we're setting the stage. Exports have picked up a little bit, so I guess I will say that if you look at outstanding sales in the U.S. on beans, 2 months ago in August, there was almost nothing sold for this fall. I mean, it was a historically low book. And now, you fast forward to, the first, second week of October, and we're actually running higher than what we had from an outstanding sales pace, right? Than a year ago.
Yep.
So we've caught up, we've caught up to some degree. And we had another flash this morning. So we are generating some business as well. That's encouraging. But honestly, the question from the export side is that just going to help us tread water and hit USDA estimates? Can we increase it at all? Or is this just, are we just holding the line?
Right.
So it really comes down to how much more business occurs here. And then, obviously South America is going to play a big role in this. We got to watch planting. It does look like there is some rain relief coming, right, Brian?
Yep.
Mid-month towards late October.
A lot of rain. Yep.
A lot of rain. So maybe they have a slightly later crop, but, we might avert disaster. Too early to call it today. Obviously, the bigger their issues are, the more business we can pick up as time goes on. But we have, from a stocks to use standpoint, we also have ample supply to be that backstop and fill that gap, right?
Yeah, I think that's one of the big points, especially from the merchandise, maybe a little bit more from the merchandising perspective that we're seeing with how quickly bean harvest progressed
really fast.
And the country's ability to handle that crop. We took some beans, put it in corn space.
Sure.
And as we've caught up on the export picture, the river needs some beans. There was a lot of cash carry in beans. Farmers sold, on the rally. Now we've dropped back to sub $10 cash. It feels like it's slowed down a little. So we are seeing some basis improvement. We are seeing a little bit of spread activity on the front end.
Yeah.
No Jan coming into sub 16. But it still feels like the comment you made there really stands out, that the balance sheet, our carry out, it feels comfortable. We've got more stuff than we had last year.
Right.
If the market demands that, feels like the industry is willing to hit it. We just got to get through what is kind of a logistic space crunch on the front end here.
Yeah.
And then the market, I think, can step back and focus on this. Gulf wants beans, I can execute beans. Processor needs some beans, I can sell some beans. But right now it's just, I got to get harvest. I got to continue to facilitate the harvest flow. And it's hard to do.
Yeah, I think that's exactly what it is right now on the front end of this thing. Bean harvest came at a rapid pace. Like you said, beans are taking up corn space and there's not really a gap. You look at the forecast here, bean heads come off, corn heads go on like right away. And we're going to see massive, massive progress done in the next 7 to 10 days. And there's really no lag. So from an ops standpoint, if you have beans taking up corn space, it's really hard to hit halt when you got inbound trucks of corn come in and say, you know what I'm going to do today? I'm actually going to prioritize bean loadouts and we're going to sell. Exactly. Surely there's some space that can flip and values are going to dictate that and the flows. But I think that's what's kind of created this short-term pinch. And not poor, but sub-quality beans, maybe in some of the
pockets,
southern arc too, and some pockets that's causing some premiums to maybe reach a little further north to fill these OC and first F NOVA obligations. I think that's all playing a role in it. If you zoom back though, we got a 550 carry out according to the USDA on paper. A lot of analysts think that's probably on the lower end of where we could land. Might not be, but that's, there's bias out there for that. We were 370 something last year, and then the 3 years prior to that, we had a 2 in front of the carryout.
Right.
So if you take all that into perspective, we are surplus beans. We should be comfortable. This shouldn't be a problem to fill it. But again, harvest is coming at such a rapid pace. It's creating some ops, logistics, short-term movement constraints.
Especially, go ahead, Brian.
No, I'm sorry to interrupt. I'd nudge in a farmer marketing comment on top of what Michael just said. And he did a terrific job of amplifying that carryout is going higher. Last year was 340, 550, and possibly higher, as Michael said. Point being is it's probably not too early for a producer to even look at 25, Nate. And here's why. The crop insurance base period for 25 beans doesn't occur till February of 25. Now, there's a lot of time, needless to say. You need to work really closely with your trusted risk management advisor and what's best for your operation. Flexibility is the key, but there's some short-dated options you might want to look into. Different, and you can do that with corn too. But more so, I think, is remembering that for 25, you don't get any type of floor until February.
Yeah.
And between now and February, if Brazil gets anywhere close to this 170 million tons that the USDA is forecasting,
as you were building this
my
headline.
goodness, as Michael said, I don't want to get the cart too far in front of the horse again, but my goodness, that's a huge crop.
Yeah.
And that would really torpedo our export program that
That's-
second half of the crop year.
Right.
That's the weight of a U.S. carryout, even 200 million bushel more than where it was last year.
Right.
If we don't continue to see issues in South America, right? We've had a little hiccup on the front end planning, short-lived. If they get the rains and it's going in and looks to be anywhere near the USDA's production outlook, it really can feel heavy on the back end of the marketing year.
Yeah, I want to underscore that a lot of time between now and pod set and pod fill occurs in Brazil. So flexibility is a key. We don't want to bank that or bin that Brazil crop yet, but it certainly has that potential in terms of acreage and what we've seen the last couple of years in terms of yields. And now, as Michael highlighted a moment ago, the dry season is ending from all indications, and the wet season starting here last half of October. That would be a little bit late, as Michael said a moment ago, but not a catastrophic situation so far. So, but flexibility is the key when you're talking about that far out, I think.
Yeah. Wide open harvest pace. You hate to see the board step back and see farmers pull back on their risk management just because, maybe I don't believe the yield or it comes down a little bit. You continue to confirm that this crop looks good, could potentially get bigger, right? It doesn't have to get smaller on beans, or it could continue to see the crop size and increase. And with the South American risk, we've got some positives on the demand. A lot of that is our price competitiveness with low prices buying demand. So just don't lose track and focus of that marketing plan as the combines continue to roll. Maybe one last comment, Brian, just anything really stand out from wheat changes that we saw, or what are we still watching around the world here?
A little bit surprising, Nate, that they did not adjust Southern Hemisphere.
Right.
They left Australia unchanged at 32 million tons. Australia did not have a good finish to their growing season. It wasn't awful, but it was dry during the month of September. And for the first 10 days of October, it had been dry. So a little bit surprising there that they didn't adjust that. Maybe we'll take another look at that again in November. And they did not change Argentina either. Now, Argentina is a little bit later in terms of crop development behind Australia. So maybe in Argentina, it is rainy now in Argentina. So I want to underscore that had been an extended drought in Argentina. It is rainy now. So maybe the USDA took that into account. But if you take those numbers at face value, we are the residual supplier of wheat. There's no doubt. In fact, the USDA nudged down the hard red winter exports today by 20. Now, they did nudge up soft red by 5, but that's, small changes. And I think they nudged up the Ukrainian exports, I believe, today again for wheat, nudged up their crop size like 600,000 tons, nudged up their exports 1 million tons. One variable to keep an eye on, though, Nate, and I'm sure that anybody who follows wheat has heard this: will Russia impose some type of export restrictions going forward? I don't know the answer to that, but if they stay as dry as they are right now for this crop that they're planting for 25, folks may get a little jittery there in terms
Yeah.
of this aggressive pace that we've seen
Right.
in terms of their liftings from this 24 crop. They may pull back. That's just, I can't make a prediction on that, but I think from a risk management standpoint, as a producer, you want to maintain flexibility there. And from a merchandising standpoint, remember that too, that the Russia is the 800-pound gorilla, if you will, in the room. When they change, the whole structure of the market can change. And but again, just something to be aware of that it's very dry in Russia at the moment, and that's something to watch going forward.
The exports on soft red too, I would imagine, Brian, are probably related somewhat by quality and production shortfalls in the EU to some degree, right? So it makes sense that, given the soft red balance sheet in the US, that maybe we pick up a little bit of that business as time goes on. But the other thing too is, unlike last year, in soft red wheat country, like especially in the Eastern Corn Belt where a lot of this stuff is produced, we had a fairly late harvest last year. Beans have rocketed off across space this year, of course, but in the East too, there's wheat running right behind beans this year as well. So concern about late planting and acres are not the same as they were a year ago either.
Yeah, and I've heard a couple of producers make comments on the best returns they had this year were the wheat and then double crop beans, especially as you get in these below break even and really focus in on your, protecting your balance sheet. There may be some decent returns if you can get some risk management strategies in place and get some wheat sold and get some beans following that yield like they did this year. So
Michael makes an important point there that really a struggle last year up in Michigan, for example, getting the crop planted. I think they're flying in Michigan this year.
It's moving
getting
quick.
The crop planted.
Mm-hmm.
Well, pretty well sums it up, right? Wide open harvest here. We're going to continue to focus on that, and appreciate everybody joining us. We'll do it again, I guess, in the November report, and don't forget to tune in 9 a.m. weekly to the Market Outlook from the ATI staff. Thanks.